We're joined by Sudakshina Unnikrishnan, a soft commodities analyst at Barclays Capital. Good to see you there. As far as grains are concerned, there's still an upward risk to prices. For how long? It's not just down to bad weather, is it?
No, that's absolutely correct. I think bad weather in the short term has really been the big catalyst for pushing prices higher. Because if you go back, and rewind just to 2010, then we actually had a series of weather-related events. And the worst one there with regards to the grains was actually drought in Russia. So last summer, you had Russia banning grain exports. And then now into this year, the expectation was that with these sort of elevated grain price levels, that we would see a big rebound in terms of global production. So while plantings in acreage devoted to the grains has increased. In the US, for example, they were expecting to plant over 92 million acres of corn. Similarly, a big increase in terms of cotton as well as wheat plantings. But then you've really had, weather throwing a span in the works. And that's really meant that those sort of estimated big elevated levels of plantings are not really going to materialize because of weather. And in the backdrop, of course, you have the continued upward shift in terms of the demand side of the equation staying in place. Chinese imports, for example, last year were at very, very elevated levels. And we've seen a continued diversion of a lot of the grains going into biofuels and ethanol in particular in the US.
Yeah, so in terms of what we've seen today coming out of China, those figures still remain pretty impressive. Have you had to revise your forecast for the price of wheat and the likes, and what kind of level from now can it still grow by? Are we talking 10-15% increase for the price of wheat?
No, that's a very good question, because I think the fact that we're seeing persistently high inflationary pressures remaining in place in emerging markets is really reflecting some of those tensions between demand and supply. And with regards to China, you've had a drought there at the start of the year, and you've had that leading to estimates of slightly lower levels of wheat production. Now, Chinese imports of things like wheat have already been fairly high for the first quarter of this year, so they've been importing a lot of feed wheat from Australia. And I'd say from current levels, we would view things like wheat and corn especially with an upward bias, but we do think that a lot of the good news is already in the price. So from current levels, we need to have further triggers to be able to keep prices at these sort of levels, or in the case of corn, to continue to test new highs.
If they're testing new highs, sorry to interrupt you, if they're testing new highs, what about sugar, what about cotton? Have they peaked?
Well, sugar and cotton, in a sense, have been very different, because you've seen the peak in both these markets coming a lot earlier in the grains. So if you look at cotton, for example, then you had a series of all-time highs being hit through last year and into early this year. And we'd say, compared to those sort of levels where prices rose as high as $2.20 a pound, those sort of highs are behind us, at least, in the short term. Because if you look at the case of cotton, you have had a slight level of disappointment coming in from dry weather in Texas, which is the largest producing state in the US. But if you look outside the US, especially in the case of India, for example, Indian acreage is estimated to expand, very, very markedly this year. Chinese acreage is expected to. So these are the sort of markets where we think the highs are behind us, at least for this year.
So
but markets like the grains we think are still going higher.
We only have 20 to 30 seconds left, but I was wondering just what you make about the longer-term picture for this. We had Glencore today saying in general that actually commodities are on the rise, but is there a likelihood that we will get a huge correction in the next year and a half, and what kind of impact will that have on traders in general?
Well, I think in a sense, agricultural markets are quite different, because the longer-term supply side especially is driven more by factors, things like weather, things like productivity, quite different from the industrial metals and the energy complex. But the demand side of the equation, especially longer-term, remains very, very robust, especially in line with urbanization and trends in emerging markets. But shorter-term, you're going to have things like, weather conditions, crop conditions driving prices. So in the case of agricultural markets, let's just put it this way, expect the floor for prices to stay very high, but don't expect a continued uptrend every single year, because that's just not the way the agricultural markets tend to work.
Great, thank you so much for that, Sudakshina Unnikrishnan there.